The S&P 500 is less than 39 points from making a higher high and 5.19% from its all-time high. And the Nasdaq 100 made a higher high last week and less than 5% from its all-time high. Market participant fear level is near a 4-year low. The VIX is in the 12 level. So far, the November rally has recouped the last 2 months of losses and is only 1.04% or 47.74 points from this July high at 4607.07. And if we could take out this July high, then it would put up a monthly higher high. And looking at this table here, all the major indexes are up more than 7% so far for the month of November. And the tech-heavy Nasdaq is up more than 10%. Year to date, the Nasdaq 100 is up 46%, and the S&P 500 is up 18.7%. While the small cap, the Russell 2000, is only up 2.63%. Surely the small cap are not leading the recovery if one is to say this is a new bull market. Welcome to another weekly S&P 500 analysis. The market defies the odd and went up 4 consecutive weeks last week. In the last 10 years, the odd was 18% chance for a 4 consecutive up week after 2 consecutive down weeks. Now that the market has defied the odd, this coming week, the odds are in favor for a 5 consecutive up week. Because the last 6 times the S&P 500 went up more than 3 consecutive weeks, after 2 down weeks, it has been up 5 consecutive weeks 4 times, and 6 consecutive weeks 2 times. So the odds are high for this coming week to be positive. And looking at the sentiment, the put-call ratio have been hover inside of this head zone between 0.75 and 1. And the VIX is down near the 12 level area. So the market participants are very complacent and have very little fear, but they are still cautious, not totally risk on. And the up-down volume ratio was not very robust as the S&P 500 moved higher last week. It was below 3-to-1 in favor of the up volume throughout the week. And the daily advance decline was not very strong as well. It was only 756 more advancing stock than declining stock on Tuesday, the strongest day of the week for the S&P 500, when it was up 0.74% or 33 points. And the number of stock make new 52-week low has been under the 30 level, but the number of stock make new 52-week high only improved slightly, and it is still under the 100 level. So if this rally is to continue, the number of stock making new 52-week high need to increase. And there's no divergence between the New York Stock Exchange cumulative AD line and the S&P 500 last week. And for the Nasdaq, the up-down volume ratio was also not very strong last week. Its highest reading for the week was only slightly above 3-to-1 in favor of the up volume. And the advance decline, the daily advance decline, never came close to the 2,000 level last week. The Nasdaq did have a couple days with more than 100 stock making new 52-week high. Just like the New York Stock Exchange, this internal needs to be more robust if the Nasdaq is to continue to move higher. And overlooking the long-term negative divergence between the Nasdaq 100 and the cumulative AD line, we did see a small positive divergence last week between the Nasdaq 100 and the Nasdaq cumulative AD line. Now, looking at the 11th sector in the S&P 500, not much have changed. The tech continue to outperform the S&P 500 while the healthcare is underperformed. Consumer discretionary is also underperformed, and the financial is kind of neutral, flat. Communication outperform, and the industrial underperform. And the consumer stable is underperformed. Energy has also been underperformed recently. So is the real estate and the material as well as utilities. And looking at the other sector, we see the semiconductor showing a bit of an underperformance last week, but overall it has been outperforming the S&P 500. And the energy continued to be weak, and you see the oil is underperformed, and the oil exploration and processing is also underperformed. The retail, biotech, and the mining, they are all underperformed. Now the bank and the regional banks been kind of neutral, flat, but the home builder is still outperforming and the long-term bond is underperformed. Looking at the yield curve for the 10 versus the 2-year, it went a little bit lower last week, but overall not much has changed. The 10-year versus the 3-month ended the week practically unchanged and is still pointing to a recession. And the 10-year yield came close to the 4.33 level, then it bounced right back up to the 4.47. And I'm looking for it to come up to this 5.3 before it peaks. The dollar dipped below the 104 level. We'll see if it will continue to move toward this 100 level or will it get a bounce and move back up above this 104 in the near term. And I still believe the dollar will go higher. And for the dollar future, we see that it dipped below this 104, this composite point of control. And we can see it come down, possibly maybe test the 102.66 before it bounces back up above this composite point of control. And oil is still holding above this 74.50 area. So we're going to see will it be able to move back up to this composite point of control near 81.50. Silver was able to hold above the composite point of control at 23.84 level and is currently sitting above the 24. So if we could stay above this 24, we could see silver move back up toward this 26 area. In gold, we were looking for gold to move back up to the 2000 level, and it did move up to the 2000 level last week. So next week, we'll be looking for to see if gold be able to move above this 2010. I'm still looking for gold to come up and take out the all-time high. Now let's take a look at the indexes, starting with the S&P 500. We did see the S&P 500 fill the August gap and close right at the upper range. And for the coming week, the upper range is between 4610 and 4601.70, and the lower range is between 4517.50 and 4505. Now, if the recent upside momentum is to continue, we'll be looking for this 4600 to get hit and tag the upper range. Then we might see some resistance up here in this 4600 area. Now, if it is able to move past the upper range, then this pivot high at 4637.30. If we do see a pullback this coming week, then look for the lower range and possibly the 4500 level to get tested. Since the CPI gap, there was only one down day out of the last 8, so it shouldn't be a surprise to see some sort of pullback or consolidation in the coming week. The Nasdaq 100 took out the pivot high from January 2022 at 16,017 before it pulled back slightly and closed beneath it. If it could move back up and stay above this January 2022 pivot high, look for the next pivot level near 16,600. If Nasdaq pull back this coming week, then look for the possible gap fill, the CPI gap. The Russell 2000 was unable to move above this 50% level of this consolidation area, this balance area. So continue to watch the price action to see if it could make it above this 50% level or above this 1830. Otherwise, we'll watch for a possible retracement back down to the lower edge of this balance area near the 1,640. And the Dow Jones Transportation is trying to get back up to this 15,320 level. The Dow Jones Transportation is still trying to get back up above this 15,320 level. It does look like it has formed a small right shoulder here for this inverted head and shoulder pattern. So we'll see if it could move up above this 15,320 level, and that would be validating the inverted head and shoulder pattern. And last week, Microsoft helped keep the Dow Jones Industrial at a higher level. So we'll continue to watch to see if it could come up to this 35,600 area, or would it come back down and try to test the 34,000 level down here. The New York Stock Exchange Composite filled the September gap and could be moving up toward the 16,400 level. We'll continue to monitor the 15,700 level for potential support if it pulls back. And for the E-mini S&P 500 future, we see that it has broken out from this 4-day balance area and is moving toward the 4,600 level. Now, there are a couple poor low here from last week, so we could see a pullback to resolve these poor lows. and that will bring it back down to backtest this breakout area, this upper edge of this balance area. But if it enter back into this 4-day balance area, it could retrace back to the 4,500 level, and that would end up with a look above and fail type of a move. So from this volume profile, since it broke out from this balance area, we'll see would it be able to move up to this next balance area up here at this 4,600 level to find acceptance up here. And if it come back down to this balance area, then we'll look for a retracement back down to the 4,500, as we said earlier on the market profile chart. Looking at the ETF for the index C, starting with the diamond, the Dow Jones Industrial ETF, it moved above the 350.77 level last week and closed above the upper range, and that put the August high in play. And the upper range for the coming week is between 357.90 and 357, and the lower range is between 350.60 and 349.80. Now for the upside, we're going to monitor the upper range as a potential target, and for the downside, we'll be watching the 350 level, and that would be in the lower range area. And if it go below this level, then look for a possible 346.32 down here near the CPI gap for test of potential support. And the SPY, the ETF for the S&P 500, broke out from the balance area and move up to the upper range and close right at the upper range. And the upper range for the coming week is between 460.60 and 459.50. And the lower range is between 451.10 and 450. So look for the upper range and the pivot high near the 459.44 for potential upside target. Now the downside is the lower range and possibly the CPI gap near this 446 level. The Q took out the July high and moved up to this 80% extension from this balance area. And also it closed right beneath the upper range. The upper range for this week is between 396.30 and 394.90, which is right up at the 100% extension of the balance area. And the lower range is between 384.10 and 382.30, and right near the CPI gap. So for the upside, we'll watch for the 100% extension or the upper range. And for the downside, we'll look for the lower range and possibly the CPI gap. And for the IWM, the Russell 2000 ETF, it was unable to take out the shooting star high here and close in between the weekly upper range and also the weekly lower range. And also it closed under the 50% or the midpoint of this balance area. So for the coming week, the upper range is 183.80 and 182.70. And the lower range is between 175.90 and 175.20. Now we'll continue to monitor to see would it be able to get above this 50% level. If it does, then we'll look for a move toward the upper edge of this balance area near 200 for the near term. And if it stays below the 50% level, then we'll be monitored for it to retrace back down to the lower edge of this balance area near the 162. So in summary, although the odds are in favor of an up week, but the price action is showing the market is a bit extended on the upside. And when the majority of the market participants are leaning on one side, the market has the tendency to move to the opposite side. Also, last week, internals are not that robust, and that could be a sign of market fatigue. And as a reward to you for watching to the end of this video, here's a chart on the open interest for the weekly SPY option that expired this coming Friday. The chart shows there is a call wall at 455, and there are two call peaks at 450 and 460. These call peaks could be indicating there are a lot of call butterfly being set up, and the market participants are expecting the price to be closed on Friday between 450 and 460, and for max profit, they would like to see the SPY close at 455. Now there is a put peak at the top of 450 and the 460 call peak. So these levels could be a battle level for the bulls and the bears. So look for the price to get pushed back down when it approaches the 460 level, and look for the price to get lifted when it approaches the 450 level. If you'd like to see additional content from me, go visit my newsletter at Substack. The link is smtraderca.substack.com. Be sure to smash the thumbs up to help promote this video and subscribe to help this channel grow. Thank you for watching and good luck.